Again, and welcome to another episode of Stock Talk Product Review. I am your host, Mike, and with me I have Kage, and we're here to discuss the zombie economy, is what they're calling it. All the economists are calling this the zombie economy right now. Panic is setting in hardcore across the markets. And what are people doing? They're going to the mall and just not paying attention, but they should be paying attention. I've got several charts up here. Today's show, a lot of the information here was brought to you by Hedge and also by Dave Brat, economist, and Steve Cortes. So we're going to read some of what they've highlighted with some of these charts and real economic indicators and things like that. We're doing this for you because we're trying to prepare you for what's coming. And when we get any of this news, like we told you before, we're going to say it. Whether it makes it on board with the tube, the blue tube, if they don't censor it, I don't know. But we're not trying to fearmonger or nothing. We're just trying to give you all the information. You doing good there, Kage?
Pretty good overall.
Yeah.
Just thinking about some things that happened today, but we'll get through the show.
Yeah, for sure. So one of the first charts we brought up here was real GDP. One of Dave Brat's quotes today, he said, is that when you're going by this chart, you're looking at stimulus that the government's injected since 2020, and you're giving a kid a sugar high and things like that. And what's happening is on that sugar high, you're going to go towards that crash, and we'll explain a little bit more on that crash. What do you have to add on that analogy that he has?
Well, undead economy, or rather zombie economy, but I'd rather use undead economy apparently.
And yeah,
because undead is, I think, a more applicative term. I mean, yeah, it's shambling around, and sure, people are trying to pay attention to what's actually what it's doing, but let's just say that some people wanted this to happen so that they can take control of different things. So
and this hasn't even taken it to the energy crisis that's coming ahead. I believe a couple shows ago, maybe last week or the week before, you said that we are coming into a dark winter as far as energy and things like that. And hopefully, God forbid, we won't have things like what Europe's going to go through, but Europe's probably going to come over here as far as the power problems and things like that. So
I hope they bought plenty of blankets, because they're going to need them.
But the power crisis is for another show. We'll go into that. So with Brat's analysis and everything, he goes out and points out, obviously, that you have 2 quarters of negative growth in the GDP. He puts in there 37 trillion since you have a decade of $37 trillion, and they're also talking to fix this problem, Kage. They're talking about injecting more and more debt into this, and what that's going to do is that is just going to zombify this thing even more to have a harder crash. Some people out there, I'm not willing to say this yet, but some people, they've been mentioning D word. I'm not willing to mention D word yet, and you know what I'm talking about. What's your take on that?
If anything, if they try to inject more of this fiat currency into the system, it's only going to exacerbate the problem.
You've had $8 trillion injected into this thing since 2020. It's a freaking dog show.
Yeah, I mean, if anything, it's only going to make the cost of living go down. You need to have something that's backed by something else that has real value. And right now, we're basing the value of what we have on faith. in that institution. And that is sandy ground to basically build a house on. I'm sorry if
no, you're not. You're good.
People want to build houses on a sandy foundation. That's their business. I would rather have something that's actually more solid, something that actually has substance, that has true value that everyone can get behind and understand and be sure on.
So you have another chart here. This is GDP versus federal expenditures right here. And this is a very, very troublesome graph. According to this graph, you could see this right here. This graph has government assistance. Do you know that 35% of the government's the economy is from government transfers?
I knew that it was extensive, and there were several programs that lean on it. Yes,
35% is government transfers in this economy. I didn't even know that. I just found this out there. It's the far right graph, if you could see on the right, is $6 trillion of all income dependent on government transfers right there, right on that corner. So that's government assistance right there. What's your take on that? I mean, obviously you can't keep on going along. The thing is you're running out of the tax as far as tax collecting right there. You're not. Go ahead.
It basically is like. I mean, I have seen several people on government programs that just only live on government programs, but they're not getting themselves into a better position because of it. I mean, working is usually the only way to actually get yourself truly out of poverty. And but again, people are not stupid. If they keep going along with like looking for work, or they claim they're still on disability and they can't, or whatever, for whatever reason, then they're just going to keep getting these government programs and just staying where they are. And it's only going to take money out of hardworking Americans' pockets instead of theirs.
The last time the government had this type of support, where all the tax was greater than this, looks like was the Great Depression. That was the last time that this was this high like this. So with all the taxes collected, this is where it was at. This was close to where it was at during the Great Depression. This is not a good territory. So what's your take on that on that one?
Just how things were for our ancestors back then just interests me a lot, because they did things because it was necessary for them to do them, like victory gardens, or moving out to California when the Dust Bowl happened and they needed to find work in those orchards and places in California, or all those government programs to help beautify communities with roads and trees and whatnot, just because other places were not necessarily given enough resources to actually repay their workers for.
So going back to looks like I lost it there, guys. Sorry, tech. Okay, so this is the total debt versus monetary velocity here. I'll explain a little bit on this chart right here. The graph here is the GDP growth. When interest rates rise, people ask, what's at stake? Well, there's a lot at stake. Do you see the gray line that's on there?
Yes, I see the gray line on the bottom. Yes, there's
so the gray line,
orange line on the top, and there's a blue line in the middle.
That's the gold line on top. So the gray line is GDP growth right there, you could see. Now, with the growth and all the debt, business debt is about $75 trillion. So you're going to see a lot of freaking businesses come on default here pretty soon, and you're going to see that pop. The Alphabet News doesn't want to talk to you about that because they're too busy chasing Trump people and things like that. And that's all a distraction from what's coming to you. That's the thing, folks. We're not cooler carriers for any political party or anything here. But what we're trying to tell you is that that's all a distraction from what's coming as far as with this. Do you see the gold line right there?
Yeah, I see it.
The gold line is the gold line is velocity as far as for 2.1. When that line goes down, which you see, do you see that going down?
Yes, I see it toward it after the peak. Yes.
That's the money supply times velocity. That means the Fed has to print twice as much money. So to keep up with that, what's your take on that so far?
Just they keep printing all this monopoly money, and eventually the monopoly money is actually worth more than the actual money.
Yeah, exactly. And so what do you think the banks do to react to this problem?
They try to give more loans out to people to make up the difference.
So as the Fed draws down, the banks provide more credit and drop in more into the money supply. This right here totally has to freak out the younger generation if they're not already freaked out. They need to wake up. It has nothing to do with either side politics because neither side is on your side. People need to wake up and spread this message as far as that this needs to be addressed, and it needs to be addressed bipartisanly, and they need to stop kicking the curb and saying they're going to put more debt, because if this doesn't get addressed soon, you're going to be worse off than a Russian serf. That's all there is to it. What's your take?
All those numbers in your bank account will account for a lot less. And you won't be able to have a lot of more purchasing power than what you could before the year before.
Yep. And so I got another chart here I'm going to bring up to you. We're going to close this one out right here. So we got right here on here the S&P chart. Now some people say this is not relevant to the economy and everything like that here, but the blue bars represent activity here. The output index and real GDP for the Federal Reserve, output is going down, manufacturing is going down, and earnings estimates are on the decline. So what's your take on that so far with you hearing I mean, you already knew that already from other shows, but with manufacturing going down and the output going down, and earnings, which they say are, oh, it's up, it's a freaking lie. It's not true. It's fake news.
Even if that were true, even if there are all those numbers that are floating around somewhere in people's bank accounts, that money is not really there. There's only so much that the banks can actually lend out to people, and there's only so much money that's actually stored in actual banks. I mean, when you say you want to get a $5,000 loan, they don't necessarily put that money from somewhere else into your bank account. They just type 5,000 into your bank account and just conjure it out of thin air. That's all they do. And people need to understand that. Yeah. You need to get your head, everything straight and figure this out, and at least try to spread the word about this, because they're coming at you and saying, oh, you're this, you're that, because you're talking about this stuff and you're against it. No, there needs to be shrinkage. There's too much spending. We have $37 freaking trillion in spending. That's total ridiculous. It didn't need to be this way, But money here, I wish money people there. Had a money class where they actually talk and learn about how actual wealth is made and traded, and how it can be used for great good or great evil. And we just don't have that in our school systems, and I wish they did. Yeah, they spend more time at homeroom instead of going through this. Like with the combination of the earnings that they have, companies are now going to be reporting zombie earnings, and you're going to see massive bankruptcies and things like that on certain companies coming down the pike here shortly. Cortes mentioned that there is what is it here?
there's a with the corporate high yield bonds warning are going to trigger defaults like you've never seen. And the Uniparty, their answer to all this is we're going to spend more money to fix it. That's what their message is to all of you guys. If that's the route you guys want to go, it is what it is. So you can try to, you're reading the news and you're reading about all this stuff about how this guy's bad and that guy's bad, and we're not going to mention names. But this is the real problem right here. This is your future. It's your grandchildren's future. It's your kids' future. Only you can get out the message. And we didn't do this video here, to carry the cooler for any party or anything. We did it for the future of America, and that's what we did. So spread it around. Let people. That's my take. Let people know what's going on. Brat and Cortes put all this information out and got it out. Wanted it to get out to everybody, so people would be educated to know what was happening with the zombie economy. So. What's your final take on that? And I'll start getting ready to go on the twits while you're doing that there, Kage. What's your final take on this?
My final take on this is, as far as like everyday people watching, you need to know what money is and how it's created and how things get moved around. As far as understanding this zombie economy, use the money that you do have to make smart decisions and always try to go for value whenever you find yourself in a position to act on it. Value is more important than just going out and breaking the bank to get the newest fad, because the newest fad will not last. Go for something that's timeless. Go for something that's more sensible, that most people will see the value in. That's all I can really say for how money is and how people spend their money. How you do things that's up to you. If you want to get a hot chocolate or something after work, that is your right to do so. But just know that every little bit goes somewhere. And be aware of the movement of those things, because every little bit adds up.
Exactly. Well, I brought up the first stock we have. This is one of the top percentage trending stocks on Yahoo. It's Ginkgo Bioworks Holdings Incorporated, DNA. DNA. Last tick was $2.63. There's no movement after hours. Now, over in 2021, obviously, it was higher, but we have your recorrection that nobody likes to talk about. So we're seeing a little bit of resistance here. The percentages were up here. Now, with this stock right here, it's going to be one of your safer ones going into, let's just say, whatever happens with this economy. We don't know. But going into what would you say they do here? They're a biotech company. Its platform market is an agnostic and enables biotechnology applications, diverse markets from food, agriculture, and industrial chemicals to pharmaceuticals. It operates a cell program foundry, biosecurity segments, and the company was founded by Jason Kelly, Resh Machete, and Bartholomew Canton, and Austin Chi, and Thomas Knight, and was headquartered in Boston, Massachusetts. Kage, going on to stock twits, because that's where the real traders are at. What do you have on the twits?
For DNA, correct?
Yes, sir.
The symbol. I have a couple of stocks here. How about this one from Gordon Gecko 888? He says DNA bullish. Nice DNA thread outlining why it's such a great investment, and he's got a link to Twitter for this company. And the title says, Ginkgo Bioworks DNA is the greatest company on Wall Street for a multitude of reasons. Here's my top 10 reasons why DNA will 100 times.
What's his reasons there?
I clicked on the link, and I'm starting to read some of the replies. Age of DNA sequencing is just starting now on a mass level, not 5 or 10 years ago. Already has many paying customers like the U.S. government. They're growing 200% each year. Fibonacci and Elliott waves are off the chart. Makes money from a vast variety of different subjects: biosecurity, chemical-free pesticides, redesigning antibiotics, animal-free meat, and marijuana, apparently.
Huh. That's pretty decent.
So, in the age of post-COVID, biosecurity is even more important than a metal detector. 80% of fruits and vegetables in the U.S. are genetically modified. DNA writes code for them. That alone could be billions in fees.
Yeah, that's true. Yeah, and some of these are on these types of stocks. They're little diamonds in the rough that you kind of hold on to once you find a good buy point, and if you keep them long enough, they'll pop for you. And then we'll try to go over as far as in the pipeline to see what else they have there, because they ride on different news waves depending on what they hit as far as in their experiments and things like that. But this news plug says Ginkgo Bioworks Holdings Friday was 2.41 against the previous day, closing at a price of 251. With 25.62 million shares changing hands, the volume of the stock remained lighter than its average volume, 26.6 million shares. During the session, Bioworks technology company that operates a wider healthcare sector reached its higher price to 29450. It looks like the 52-week DNA range touched its highest point at $15.86, the lowest point 29. So this is showing up at a discounted price right now. Does it come back? Well, that all depends on, let's see, fourth quarter and first quarter of next year, because if you missed the beginning of the show, because I put a timing on where it's at, we don't know what's going to happen with everything that's going on. So I'm not saying that, hold off on everything, but, you got to do what you got to do. It's your business. I'm not telling you what to do. I just present the companies and the news, what's going on, try to give you a little look into it, why they're trending and things like that. That's about it. So this thing doesn't tell you to get in and go and jump in and get shares. What else do you have on the Twits?
Well, how about this take from Sweetcast? He's a Plus member on Stock Twits, and he says, unusual options observed. DNA with our scanner on $2 call expiring the first January 19th, 2024, worth 27K bull market. Option flow is crucial for retail traders to see trends ahead of time. And he's got his little dashboard for this stock in the comments.
Okay, so it looks like founded in 2018, powered by Ginkgo's platform, Motif Foodworks, it's discovered the new meat, dairy, plant-based proteins made by fermentation, not animal agriculture. To feed rapidly growing population of a warming planet, society needs to develop innovative new technologies to grow and distribute food. The cattle industry, which includes both beef and dairy products, represents 1 trillion global market opportunity and contributes to 9% of global greenhouse gas emissions. At Ginkgo, they're working towards the future of genetically engineering and help making foods that are sustainable to healthier, delicious access there. And then they have their partnership with Motif. Let's go to, let's see if they got what they have in the works here. Let's see, press, careers, their work. Let's go to that. Let's see what they got in the hopper here. So ultra high throughput genome engineering production of specialty chemicals, next generation antibiotics, COVID testing scales, modality of medicine, the era of living medicines, Ginkgo's platform, digital technology, strain improvement, the future food, culture ingredients and flavors, scaling of the bioprocess. They have the cannabinoids. So they got several things going here. If any of these things hit the news, Kage, you could have a diamond in the rough. It just depends. You just got to see where your buy point is and then see how it plays out wherever that is. I don't know where people's financials are at, but I could see why this thing's trending right now. It looks decent so far. I mean, but we'll see what happens as time tells more. What else do you have on the Twits? I'm going to give a look.
How about this take from Lou Weed? He says, DNA. The key to having such a national system, however, is coordination among partners who share their findings, says Wolf. Having a network of sites that use the same collection and analytic methods so we can compare data gives us a national picture of what is going on. We'd love to have more federal investments in systems like this. And he's got a link to Time, looks like.
Yeah. Sorry, that comment just a little flabbergasted. I don't want to get myself in trouble with people because I like everybody, even the trolls I like, but I just kind of don't agree with that. So, did you see that WH Berg Grew says stupid management Ginkgo selling 3,178 shares in 9 days before lock period ends of 6/31. It's smart because the highest price of the stock. It's the highest stock for the last sometime soon there. So, what'd you think of that?
I can see his point. I mean, we are talking about a bear take for who's also a plus member on StockTwits, and while that lockup period is interesting, it's just one of those things you have to take with a grain of salt.
Try Harder Now says we had a good day and the CEO registers to sell. What was he thinking? And we won't repeat the language because you got it on the front of the page what I showed. That was interesting. What do you think?
Just keep the language under control for that guy. As far as like the heads of these things to sell and whatnot, that's up to them. You can't necessarily just depend your entire strategy on what the heads are doing, but also if you actually believe in like the innovation that they're doing.
Yeah, this thing's interesting how it is there. I think it's worth a look to check it out and investigate and everything like that. But they got a lot of things going for them. It's just gonna be as as time will tell. I think it's definitely worth a look. What about you?
I think it's worth a look. I'm just a little hesitant about getting into anything that's GMO related. That's all.
Yeah, well, personal reasons for that. But sometimes when you get too personal, you don't make any money. So
true.
True. As long as
you have to take the good with the bad, I guess.
Except immoral. If it's immoral, I'm not getting involved. I don't care. So and I'll leave my take at that. Well, I'm going to go on to the next one. It's been trending for a while. GRAB. We've covered this one before, and we're covering it again, and we know much about it because we've covered it before, like I said. So I'm going to plug it into the old Market Watch machine. GRAB. Go on to Market Watch as well if you have to when you're looking at things. They have a great information. No, I'm not trying to do an ad for them or nothing. I was just kidding. Grab Holdings LTD, GRAB. I know this is not one of your favorites, Kage, because where it's located, I believe, unless it changed hands. $3 a share is what it's going for year to date. Well, we know why. We're seeing resistance, why it's popping up. It was higher in December 2021 when everybody was talking to before. It looks like the high there was, what, 11.93. Crazy. That was another day when we talked about that before. Going into what would you say they do here? They are the Asian DoorDash. They enable millions of people to easy to access driver merchant partners to order food, groceries, send packages, hail a ride or a taxi, online purchases. So they're your Uber, DoorDash and Grubhub of Asia. That's basically what they are in a nutshell. The company was founded by Anthony Tang Peng and is headquartered in Singapore. Well, that's good that it's headquartered there. That's not bad at all. Going into StockTwits, because that's where the real traders are at. What do you have with the best part of the show, the twits?
I'm seeing some people who are a little hesitant about this one.
I can see why.
About chance for bigger profits from this take from Extra Cautious One. He says, GRAB, a chance for bigger profits. I have done the research, as I always do, and came up with a gem. It's a nice, clean penny stock with numbers you only dream about, including 805,146 in net income. Pretty good for a small company. It's a little known. It's little known and not recommended by someone with an agenda. By the way, you should never go by online recommendations such as the best 10 penny stocks. They are all
no. When you do stuff like that, you know what that has on. You know what song pumps on when you turns on when you read articles like that. Pump up the jam, pump it up a little more. Won't you do it? Those are called pump and dumps. Those are called promoters, which get paid to write articles about penny stocks. And then what happens is you put money into them, and then a couple days later, you lose your coin. So that's one of the things we do on the show is we try to alert you of that. We've been accused of being pumpers before, haven't we?
I believe so, yeah.
We are not, because we just give you what the news is, and we say, you could look at it, do whatever, but we're not going to tell you what to do. That's your choice. We just like covering the news, and we like looking at the companies because it's pretty interesting. And the traders that are out there make it interesting in this community because they share what they know and they share their knowledge to help other traders be better traders. So we're all a community here, and we all share ideas and things like that. It has nothing to do with telling anybody what to trade. We just like to look at cool companies, and we like to see what the other traders are doing and what things like that. And then you can look at their comments, and maybe they can help you out and things like that. There also is a Facebook group that you can join as well, where people talk about stocks and things like that in the Facebook, the Hot Penny Stocks group. Grab Holdings LTD finance chief is pruning. This is from the Wall Street Journal. The company's spending as a ride-hailing food delivery app looks to cut its losses and get closer to break even. The Singapore-based company, which operates so-called super app that offers a variety of services, went public in December through a combination of special purpose acquisition company. Grab, which operates in Southeast Asia, has not turned a profit yet. So you have your other United States companies that have turned profits or got buyouts and things like that, but this one has not. Is there something that don't know that I don't know, Kage, of why this hasn't happened? Have you seen on the boards?
I guess it just boils down to supply and demand. I guess if
maybe
goods and services are in demand, people will pay good money for them.
Well, let's see what they have in this article. The Wall Street Journal says the company in late August reported revenue of $321 million for the second quarter, up 79% prior from the year. Its loss shrank to $572 million, down 29% in the second quarter of 2021. Grab said expects gross merchandise and value measuring total transactions to grow between 21 and 25% this year, down from previous estimates of 30 to 35 due to foreign exchange assets. Its forecast revenue to come down to $1.25 billion and $1.3 billion this year is the high end of previous guidance. Investors of recent months have sold loss-making technology businesses in favor of more stable stocks, hurting companies such as Grab. So there you have it. Is that that's affected some of it? Is that there's some people that see the zombie that's coming, as some people call it, and they're not listening to the alphabets, and they're moving assets to other places. It says that in putting pressure, Peter Oye, the company's chief financial officer, said accelerating Grab's efforts to become more profitable. He declined to provide a timeline when this could happen, but he said the profitability is one of the biggest questions to most of his investors have. Facing a similar challenge to reach overall profitability, Grab expects its core food deliveries unit to break even in the first quarter of 2023, followed by overall deliveries business in the second quarter next year. Various levels include scrutinizing spending, professional fees, real estate, cloud computing, and marketing. Everything is on the table for us, and the company is slowly hiring in recent months. He declined to comment on how much the workforce will grow this year. The company has 8,834 employees at the end of 2021. He also says another way to increase profitability is by boosting revenue, increasing productivity with the 5 million registered drivers. What else do you have on the twits?
How about this one from Insider Finance? He says, equity sentiment. Grab is the number 22 stock that institutes are trading with 3.2K options contracts.
Mm-hmm.
And he's got his little analysis and the dashboard in the comments to explain why he thinks about this stock.
They said also that there's a waiting period for the drivers and are idling. So that's one thing that Mr. Oy said is not good for the food delivery drivers in particular. He also said in recent months, support operations of Grabwheel's electric scooter service merged with the scooter business in Indonesia with the car rental service country. The company also closed certain store operations in Singapore, Vietnam, and the Philippines, and will have more deliveries through third-party marketplace model, Malaysia, and Jaya grocer chain. The financial team was part of a cost savings effort, who became the CFO in 2020, working to eliminate manual tasks and introducing new tools for recent treasury management systems. So we'll just have to see what happens and how that plays out. What else do you have on the twits? And I'll go through the twits as well. And I'm going to see if I can find some bears. Let's see. And keep on reading on the twits there.
Okay. How about this one from Olive Invest? He says, paper trade this options investment strategy with $100,000 virtual trading account with me.
That one,
I think that's a fixed return outcome on Grab. Make a fixed 16.1%.
That's a promotion right there, my friend.
Yeah. Well,
what else do you have on the twits?
How about this one from Earnings Insider? GRAB updates FY 2022 guidance to EPS and revenue guidance to $1.25, $1.25 billion and $100.3 billion.
What else you got?
I haven't necessarily seen people who say that this stock is bullish or bearish just yet.
Yeah, well,
and some of them have not given their receipts with them. But how about this one from Muck Twits? This was the 1st of September of this year, and he says, GRAB bullish. Have visited Thailand, Malaysia, Indonesia, Vietnam, Singapore, Philippines, Myanmar. Grab is ubiquitous, very bullish, but this is a 5-year hold for me. Won't be selling at $10.
Is this a hot take from Money Pincher? He says this will fizzle and reverse split is inevitable. I'm not saying that's that far of a reach. It's a possibility. I know a lot of you that love it. I'm not saying this. I'm just saying it's not that far of a reach. It's possible. It's possible because of the direction of what we've covered as far as the United States economy. If you think Europe and Asia are separate from this, you got another thing coming to you. That's what I'm saying. Everybody's got their head buried in the sand, and they do not see what's coming.
Well, I have to say that there is something to be said if it's prevalent in Southeast Asia, and there's a whole bunch of people that are doing this stock. Yeah. I mean, there's something to be said about that. But as far as will it stand the test of time, I don't know.
Yeah, I'm not carrying the cooler for the stock. I'm not going to get on the bad side of the people that are bearish. I'm just going to give you straight up. Money Pincher might not be wrong, even though nobody liked this thing and ignored him. I'm just saying there's all good takes on here, but that's not a bad take right there. So anyway, I'm out as far as, and I'm not saying I'm out on the stock and I hate it. I'm saying I'm out for the show because we've had that happen before there, right, Kage?
Yeah, we have. But yeah.
Yeah. So
all right. I'll just say good night, everyone. Watch yourselves and make good choices.
Yep. And don't make it a dog show. And good night now.